February 8, 2025. The day began like any other, with the city humming to life and the financial district bathed in golden sunlight. No one could have predicted that within hours the world's most powerful market would be brought to its knees. Wall Street's usual buzz was shattered by a sudden, chilling silence. Phones stopped ringing, conversations died mid-sentence, and the only sound was the anxious tapping of keyboards as traders tried to make sense of the chaos unfolding before them. The green tickers turned red. Stocks weren't just falling, they were in free fall. Numbers that had once represented growth and prosperity now spelled disaster, as the market's decline accelerated with every passing second. Newsrooms scrambled to keep up, social media feeds exploded with panic, and the world watched in real time as fortunes evaporated. Traders froze, watching a digital bloodbath sweep across every screen. Some clutched their heads in disbelief, others simply stared, unable to process the scale of the collapse. In boardrooms and hedge funds, billionaires stared at losses mounting by the second, paralyzed by the speed of the collapse. The most seasoned investors who had weathered countless storms found themselves powerless as the market spiraled out of control. Algorithms meant to manage risk only fueled the panic, triggering a relentless cycle of automated sell-offs. Each new drop in price set off another wave as machines outpaced human reaction, amplifying the chaos. For young traders, it was a brutal initiation, a lesson in how quickly fortunes can turn and how unforgiving the market can be when fear takes hold. For veterans, a haunting echo of 2008. Memories of past crashes resurfaced, but this time the speed and scale felt unprecedented, even to those who thought they'd seen it all. But this time, the cause was no hidden mortgage crisis. It was a single, seismic policy decision from the White House. Overnight, a new regulation had sent shockwaves through the financial system, catching even the experts off guard. As the closing bell rang, the Dow had plunged over 1,700 points. Trillions in wealth vanished in a matter of hours, leaving investors and ordinary Americans alike reeling from the sudden blow. The red glow lingered long after the screens went dark, leaving Americans everywhere to wonder, was this just the beginning? The uncertainty was palpable, stretching far beyond Wall Street. The crash wasn't just numbers, it was a reckoning, and no one was spared. Families, workers, retirees, everyone felt the tremors as the economy's foundation shook. The world watched, breath held, as the financial system teetered on the edge. In every corner of the globe, people waited to see what would come next, knowing that the fate of millions hung in the balance. The chaos began with President Trump's boldest move yet. A sweeping universal 10% tariff slapped on every single import entering the United States. It was a campaign promise delivered with stunning speed and total conviction, a move that would upend decades of economic policy overnight. For countries labeled as trade offenders, the rates were even steeper, sending shockwaves through global markets and igniting a media firestorm. Headlines screamed of trade wars and economic uncertainty as the world tried to process the scale of the disruption. Wall Street, caught completely off guard, had dismissed Trump's threats as mere campaign bluster. But as the news broke, traders and analysts watched in disbelief, realizing they had gravely underestimated his resolve. The executive order was immediate. No negotiations, no backroom deals, no advance warnings. The message was clear. This administration would act decisively, regardless of the fallout. Global supply chains, painstakingly built over decades, were thrown into chaos overnight. Factories halted production, ports backed up, and businesses scrambled to adapt to a new reality. Costs soared for companies and consumers alike. Uncertainty exploded across boardrooms and kitchen tables, and inflation loomed just as the world economy was beginning to recover from previous shocks. Yet Trump stood firm, calling the tariffs necessary medicine for a sick economy. He brushed off the market's panic, insisting that short-term pain was a price worth paying for long-term American strength. Investors, once hopeful for a business-friendly administration, now realized there would be no quick reprieve. This was not a negotiating tactic, this was a new era, and the rules had changed overnight. The very financiers who had cheered Trump's return to power now faced the consequences of a policy that threatened not just their profits, but the very foundations of the global economic order they had long relied on. The message from the White House was unmistakable. Wall Street's opinion no longer mattered. The administration was charting its own course, regardless of the market's reaction. The shockwaves were only beginning to spread. International markets reeled, governments scrambled to respond, and uncertainty rippled across continents. In a single dramatic stroke, America's economic playbook had been rewritten, leaving the world to wonder what would come next. Wall Street's crash went global in hours. In Asia, traders in Tokyo and Seoul woke to a market bloodbath. The Nikkei and Kospi plunged as panic spread. Hong Kong's Hang Seng suffered its worst day since the 90s, collapsing over 13%. The sell-off was indiscriminate. Banks, tech, luxury all hammered. Oil prices tumbled below $60, signaling fears of a worldwide recession. Even Bitcoin, once a safe haven, cratered as investors fled risk. Margin calls triggered more selling, creating a vicious feedback loop. The US dollar, usually a safe harbor, faltered as global confidence wavered. The world's financial web, built on trust and open trade, was unraveling. Fast. One policy decision in Washington had shaken the entire global system. No market, no asset class was safe from the storm. China's response was immediate and fierce, leaving no room for doubt about its intentions. Within hours of the US announcement, Beijing's top officials convened an emergency press conference, their faces steely with resolve. The world watched as China signaled it would not back down. Beijing retaliated by slapping a sweeping 34% tariff on all US goods entering China, mirroring Trump's escalation in a calculated tit-for-tat move. The message was clear: China would match every American action, step for step. The trade war, once a simmering dispute, had now erupted into a full-blown geopolitical confrontation, with both sides digging in for a prolonged battle that would reverberate far beyond their borders. China's first targets were carefully chosen: American farmers and rural states, communities that formed the backbone of Trump's political base. Soybeans, pork, and other agricultural exports suddenly faced steep barriers, threatening livelihoods across the Midwest. With a single sweeping move, China closed its doors to US exports, pouring gasoline on an already raging global financial fire. Factories and shipping docks fell silent as trade ground to a halt. Hopes for a quick resolution vanished overnight. US stock futures plunged even further, and investors scrambled to make sense of the chaos. American companies that sold to China or relied on Chinese parts suddenly faced soaring costs and shrinking markets. Tech giants, automakers, and retailers all felt the sting as supply chains unraveled. The once ambitious dream of decoupling the two economies quickly became a logistical nightmare. Cargo ships were rerouted, warehouses sat idle, and workers on both sides of the Pacific faced uncertainty. Experts warned of a dangerous cycle of retaliation with no clear off-ramp. Each new tariff threatened to trigger another, deepening the standoff and raising the stakes for the global economy. China's message was unmistakable. If America wanted a trade war, it would get one, at a cost that would be felt not just in Washington and Beijing, but in boardrooms and households around the world. As the world braced for the fallout of two economic giants locked in combat, uncertainty and anxiety rippled through global markets, leaving everyone wondering just how far this conflict would go. Wall Street's elite, once masters of the universe, were gripped by fear and helplessness. Major banks scrambled, running emergency simulations and issuing mass margin calls, intensifying the sell-off. Financiers who'd backed Trump now felt betrayed, their fortunes evaporating in days. Behind closed doors, disbelief and anger simmered as hidden losses mounted across hedge funds and private equity. The psychological toll was immense, confidence replaced by anxiety and dread. JP Morgan's Jamie Dimon had warned the trade war would bring inflation and recession risk. Now that warning echoed through every trading floor. The crisis was no longer abstract, it was personal, direct, and out of anyone's control. Wall Street's power had limits, and the abyss was staring back. The financial world was forced to confront its own vulnerability. Panic faded, a deeper fear took hold: stagflation. Tariffs drove up prices while choking growth, threatening a toxic mix of inflation, stagnation, and job losses. Memories of the 1970s resurfaced: rising prices, stalled economy, and no easy fixes. The Federal Reserve faced a nightmare: raise rates to fight inflation, or cut them to fight recession. Treasury yields spiked as foreign investors considered dumping US debt, making borrowing costlier for everyone. Business investment froze. Why build or hire when the future was so uncertain? The damage was already done, experts warned. The pain would unfold slowly. American families braced for higher prices and fewer opportunities. The storm was just beginning to gather. US markets convulsed. The ultra-wealthy quietly moved their money abroad. For the first time in decades, American assets no longer felt like the world's safest bet. Ironically, some billionaires turned to China, betting on its state-managed stability over Washington's chaos. Diversification became a hedge against American political risk. Capital quietly flowed into Chinese stocks, Asian real estate, and markets less tied to U.S. consumers. This exodus signaled a vote of no confidence in America's future from its own elite. For ordinary Americans, it meant a weaker dollar and less investment at home. The rich could insulate themselves, Main Street could not. The divide between Wall Street and Main Street had never been starker. The IPO market froze overnight. No one wanted to go public in a storm. High-profile companies like StubHub, Klarna, and Chime shelved their plans, stalling innovation and growth. Behind the scenes, hedge funds and private equity bled billions in hidden losses, forced to sell assets and tighten lending. The lack of transparency fueled paranoia. No one knew which fund might collapse next. Banks pulled back, triggering a credit crunch that threatened small businesses nationwide. The pain wasn't limited to Wall Street, it rippled through the entire economy. The financial system's plumbing was clogged, and recovery looked distant. Frozen fortunes meant fewer jobs, less innovation, and a chilling effect on the future. The consequences of the crash were everywhere, visible and invisible. As the dust settles, America stands at a crossroads. Is this a painful reset or the start of long-term decline? Will Trump's tariffs revive industry, or will stagflation and capital flight do lasting damage? Wall Street faces a choice: adapt to political markets or push for a return to global trade. For everyday Americans, the stakes are immediate: jobs, prices, and savings on the line. The nation must decide: self-reliance and isolation, or renewed global cooperation. The answers will shape a generation. One thing is certain: the ride isn't over, and no one is immune from what comes next.